What is going on, guys? Walter here with the Black Dow, and I want to jump into a really interesting story in regards to something that I've been concerned with for a while, and that is insider trading. A lot of people have been engaging in this kind of wash trading or insider trading, but it's been really difficult to kind of prove. And so for me personally, I kind of been just sitting back watching because I believe that's what's happening, but I didn't actually have the proof to show that it was happening. But when you have these large amount of transactions for something like a JPEG, it just didn't really make sense to me. Now, the long-term viability for things like gaming or for different types of art that do make sense, I think NFTs are going to be a huge game changer. But buying a random JPEG online, it didn't make sense to me. So I want to hop on in this article with you guys and just talk a little bit about what we're seeing here. So as we read here, we see it says insider trading allegations rock OpenSea NFT marketplace responds. So Nate Chastin, OpenSea's head of product, is at the center of a scandal that emerged on Twitter on Tuesday night. So in a statement issued Wednesday morning, leading non-fungible token marketplace OpenSea said it uncovered evidence of insider trading by one of its employees. The statement doesn't have a byline, but the public relations team for Andreessen Horowitz, a major investor in OpenSea, has been handling company communication around the scandal, which comes less than 2 months after OpenSea snagged the $1.5 billion valuation and $100 million funding round. So what they're going to do, they're going to try to do damage control and public relations around this incident. So Andreessen Horowitz is a large public relations firm. And the way public relations works, because I do work in media relations and communications, is that it's not so much just about like putting the messaging out there. The power is in the networking and the who you know, right? So a lot of these high-powered public relations firms have direct connections with media personalities, media connections, and networks. So what they can do is they can actually tone down the rhetoric. They can actually get a first peek before the broadcast is going to be shown. They can actually write in to the producers to kind of give them an idea of what the story should look like. And this is kind of a quid pro quo kind of thing that is engaged in at the higher levels of public relations. So when you do see news articles, when you do see these types of things, just know that they are extremely curated, and these are relationships that have been built over the years. So it's not just this thing where you have these, independent journalists who kind of put out the best news possible for the people, but it is going to be manipulated in some ways based on connections, who you know, the network, who they work for, et cetera, et cetera. Even if you talk to reporters, they'll tell you all the time is that if they have a breaking report, people might not even pick it up if it has to do with reporting on people who might be advertisers or sponsors or something like that. So they're going to do what they can in this case to make sure that OpenSea doesn't lose their funding and that this doesn't really affect them negatively. So in a Twitter thread, the Twitter user assembled a paper trail of transaction receipts tied to Nate Chastin, OpenSea's head of product. Chastin, the Twitter account alleged, was investing in NFTs before OpenSea featured them on the front page of its website, and then cashing out on the consequent price increase. So he had an unfair advantage there. Chastin doesn't immediately return a request for comment. Insider trading on NFTs is, of course, not explicitly illegal yet. Insider trading is illegal. Wash trading is illegal because there's so little legal precedent over the digital assets. So I guess what I want to show you guys is that this is such a new space. It's going to be, it's really important for you to do your own diligence and just to make sure that you're paying attention to what's going on, watching these trends. I think this is important because I want to show you guys one of the trends and one of the things that's going on behind the scenes if you're not able to keep up with some of these things. So there are people who are making a lot of money off of these things, and there are a lot of people who have a lot of cryptocurrency on the sideline. There's a lot of people who have parked a lot of money that might not be the cleanest into cryptocurrency, and buying a JPEG with money that might not be clean is a way to kind of wash that money clean, if you will. So this is the kind of stuff that I believe that it's engaged in because the prices are just so high. We're talking $10,000, $20,000, $30,000 for something that someone literally just uploaded, a JPEG that someone just uploaded. So it's kind of insane right now. This is one of the drivers and why gas prices on the Ethereum network is so high because of this. And I think this does have the potential to be something great. But right now, I want you guys to really be careful because there is so much kind of fraud going on in this space. with the wash trading and stuff. So just keep that in mind. And also on a little side note, the importance of decentralization, right? I want to bring this up. I know this is a little bit different than this video, but in regards to decentralization, I want to bring up the idea of Solana. The network did just go down because they reached the maximum transactions per second. So what does that look like? Well, the reason why that they went down is because they're not truly decentralized. And they do have it to where anybody could set up a node and be an operator and be like a validator on the Solana network, but it's so expensive to actually be a node. It's going to cost you upwards of $15,000 to $20,000 to get the equipment to run that node. But even on top of that, when you look at the data of the people who are running nodes, if you don't have an absorbent amount of Solana, you're probably not going to actually validate any transactions. So if you look at the people who have the materials to actually validate a node, as far as they have the technical requirements, they're not validating anything because they only have 1,000, 5,000, 10,000 Solana, which is, to me, is a lot of Solana. But in some cases, because there's so many larger ones out there, they're not actually transacting anything. So that's just something to keep in mind. Do your due diligence. I think that this is a kind of, this is one of the reasons why I'm personally bullish on Ethereum. Again, not financial advice or anything, but decentralization is one of those three, the trilemmas that needs to be solved, and just keep that in mind in the future. So I hope this brief story helped you out. I hope that you found it interesting. Leave a comment below because I always want to hear what you guys have to say about this. What do you think about the NFT market? Do you guys think that I'm crazy for thinking that there's a wash trading going on? I always love hearing what you guys have to say because I learn a lot from you guys. So thank you very much. I look forward to reading the comments in the comment section below. Have a good one.